Hello, and welcome back to Paper Traders. I'm your co-host, Eric, and I'm here with Danny, and we are two average Joes trying to beat the market. Just a reminder that we are streaming on your favorite platforms, including YouTube, Twitter, Twitch, amongst others. And please be sure to like, subscribe, and leave a comment. Let us know what you think we're doing is right, wrong, or whether you want us to just altogether quit. So.
I hope you guys aren't thinking that because, we're here for the long haul.
Also, don't forget that we have Ben Rains, who's on Tuesdays and Thursdays, right, Danny? Tuesdays and Thursdays.
Tuesdays and Thursdays at this time.
At this time, at 11
11.
o'clock.
Yep.
Central time, that is. If you're in the Eastern time zone, it'd be noon. So going along with the idea there of free lunch. But we also have a special guest here today who we're going to quickly introduce, Neena Mishra, who is the Director of ETF Research and the Service Editor for ETF Investor. Mm-hmm. So welcome, Neena, to our little show.
Yeah.
Yes, thanks for having me.
I feel like this was like a perfect time kind of for diving into the ETF world with everybody's kind of, a little nervous with what everything's going on. They don't know what to do with their money, I feel like. Mm-hmm. We had a kind of a correction, if you will, or a sell-off earlier in August and kind of jaded that entire month, in my opinion. It looked like people were just kind of moving money around. So in the safe fashion, I felt like this was a great time to kind of jump in and learn about what ETFs are and kind of, I guess, just...
Well, let's back it up first. Let's go and get Neena's background and have you tell us what you do here at Zacks and what ETFs are, and then what your involvement is with ETFs.
Okay, so just a brief background about my investing. So I used to work with the Reserve Bank of India, which is the equivalent of the Federal Reserve in India. And I worked in the treasury over there. So basically investing the country's foreign exchange reserves.
Wow. And you came here?
Then I came
kidding?
here.
I would have stayed there. It sounds like it would have been a pretty cush job.
I came to the US about 15 years back, and I came for my MBA. Then I started working here. I've been with Zacks for a long time. I worked as a financial services analyst earlier, focusing on banks and insurance companies and other financial services companies. And I've been working on ETFs ever since we launched our ETF research product about 7 years back. So I write articles, I do videos with you guys, I do a podcast called ETF Spotlight, and as you mentioned, I manage the ETF Investor Service. I also head up a team of analysts who write articles about ETFs and produce research reports. We also have a database team, so basically we have a lot of screening tools available for clients on our website using the ETF database that we have. And my goal is to educate investors about ETFs, why they are better than mutual funds, and how they can help you achieve your investment goals.
So let's start with the most basic of questions.
Mm-hmm.
What is an exchange-traded fund?
Very good question. So exchange-traded fund means the name itself suggests that it trades on an exchange. So basically, it is a basket of stocks which trades like stock on a stock exchange. So if you want to buy an ETF, say SPY, you can buy or sell it at any time.
I'm glad you brought that one up because Danny had actually said he wanted to talk about SPY.
Sure.
So while you're talking about it, I'm going to pull up the SPY ticker here at Zacks and poke around so that way while you're talking about how this works, I can be following and showing people what you're talking about.
Yes. So as the name suggests, SPY, the S&P 500 ETF, it is the oldest and most popular, most liquid ETF in the world. Trades like crazy. It holds all the S&P 500 stocks.
All of them?
Yes.
Wow, okay.
Yes.
They spare no expense there. So is it weighted or how does that work?
It is market cap weighted.
Market cap?
It just basically reflects the S&P 500 in its market cap weighting. Now, before you look at SPY and why you should buy SPY, or is there a better ETF than SPY for your portfolio, I wanted to talk a little bit about the differences between uh, ETFs and mutual funds. Because mutual funds also are a group of stocks. They also hold basket of stocks, but they don't trade on exchanges like ETFs. That is one difference. Then mutual funds are usually much more expensive. Many mutual funds are actively managed by managers, so that is why they are expensive. But the truth is that those active managers have not been able to produce outperformance.
Like an ETF does.
They have not been able to justify those higher costs, why you should pay a higher fee if the mutual fund does not beat the index, right? And the best part of ETFs that I like is that ETFs are very tax efficient. And that is because the way they are created. Now, I'll not get into boring details. For people who are interested, they can go to the Funds tab and to the ETFs tab on our website, and we have some educational resources over there. And in one of the articles, I actually explain the creation process.
Oh, that's a shame. That was actually was going to be one of my questions for you later. I was going to say, so how do you get a fund together? We should start our own fund.
Yes.
We can still go down that.
Yes. So basically, let me try to explain the ETF tax efficiency using a small hypothetical example.
Sure, of course.
So Eric, you and Danny, both of you decide to invest $2,000 each in S&P 500 mutual fund. Okay. Now you invested this money. In December, you decide to go to Aspen for your skiing.
Because everybody knows I like to ski here.
So you say, okay, I have to sell my mutual fund because I need that $2,000 for my trip. I don't know whether that would be enough for your trip or not. Anyway, so you sell your mutual fund. In case of mutual funds, the redemption is in cash. So that means the manager of the mutual fund will actually go and sell shares to pay that $2,000 to you. Now, we all know that stocks have been going up for the past 10 years, especially the large cap stocks that are in the S&P 500 index. They have appreciated so much over the past 10 years or so. So when the manager sells that mutual fund, those stocks in the mutual fund, they will incur some capital gains, right?
Right.
Now you have
Well, the government's got to get their end, right?
Yes. So
Of course.
now the fun part is that you have left the mutual fund, so you don't get to pay those tax. You will pay your own capital gains tax.
Right.
But not the mutual fund capital gains taxes. Now the capital gains that the mutual fund realize because of stocks appreciation, they will be passed on to remaining shareholders of the mutual fund. So Danny will get a capital gains tax bill later in the year. So that is why mutual funds are not tax efficient. ETFs, they have a different kind of creation process. The creation and redemption is in kind. So they are authorized participants who can buy the actual shares, underlying shares, and provide to the ETF manager. So this entire process, being in-kind process, does not create any capital gains. So that is why if you had those $2,000 invested in S&P 500 ETF and you sold that capital gains bill, there wouldn't be any capital gains, and
Right,
that
I
will
just
not
pay
that
the
bill will
transaction.
not go to
So
Danny.
just to kind of clarify, is this because of the way they hold the stocks? It sounded like they are purchasing shares differently, or how does that work? Is there a big difference between mutual funds and ETFs on the way they hold stocks?
Yeah, they hold in the same way. It is just the creation process. So for ETFs, the creation and redemption is in kind because there is an extra layer of authorized participants
Okay.
who buy and sell shares to create the ETF for the ETF provider.
Right. Okay.
And that creation and redemption process also ensures that ETFs usually trade very close to their net asset value, which is the value of the underlying securities. Now, there are certain, kind of ETFs which are exchange traded notes, which can at times deviate from their underlying asset values. So when you are buying exchange traded notes or ETNs, you should be careful about that. But in case of most ETFs, they trade very close to their NAVs. And again, if you want to learn more about ETNs and why their prices can vary from their NAVs, I wrote an article yesterday. You can go to the ETF section of our website and
Try to
learn
find
more.
that right now.
And so because I don't want to make it very complicated or boring for people who are not interested in ETNs.
Well, no, that's right. People are here. We want you to tell us about this because I feel like anybody who's coming to this show is definitely expecting to be educated on what's going on in the markets. And that actually goes in sidebars here to remind people that we are live and we are streaming and we can actually see your questions. So if you have any questions, please send them in. Neena will answer any questions you have about ETFs, ETNs, or probably anything else, seeing as she is so diverse in terms.
I will try to.
Right. And if not, she'll get back to you. But
Yes.
we have just a good morning here and thanks from Fua Boss, our regular viewer here. So hello again.
Good morning. Good morning. Kind of going off of that and learning kind of, I guess, the basics of what an ETF is. When you go to some of these quote pages on Zacks, they don't look like your normal quote page. They can be, I guess, a little intimidating just because you're not used to it. You're used to seeing, earnings date and PE and all those other metrics. But with this, it's a little different. You see kind of expense ratios and dividend yields. And it looks like just kind of your volume and stuff like that. What metrics, when looking at an ETF, should, I guess, investors be most
Aware of.
cautious, or aware of?
So if you're buying an ETF, most people look at the cost, which in case of ETFs, most people look at the expense ratio. And that makes sense. If you are a buy and hold investor, then expense ratio is the most important metric you should look at.
What does that exactly mean? Are you paying these guys for what? What exactly is the expense ratio that you're paying when owning this ETF?
Right. So if you go to the quote page for SPY, which again is the most popular ETF, oldest and biggest, most popular ETF, it has an expense ratio of 9 basis points. Now this ETF sponsor is State Street Global Advisor. So they incur some cost in managing this ETF because they buy all the underlying securities and everything. So that is why this is sort of a management fee which goes to the sponsor. Now notice how small this is, 9 basis
That
points.
is, it's not even a full percent.
Right. So this is just $9 for every $10,000 invested.
Okay.
So that means this for every $10,000 that you invest, $9 will go out of that every year, and that will go to the manager. Now, since it is so small, you will not even notice the
Right.
difference.
I was going to say, it's not so scary when you put it like that. Sometimes you see those percentages and you're like, does that take out of what I have invested now? Or
Well, and like you said, it pays the bills, so to speak. You got to have somebody who
Right.
manages this and pulls the
Yes.
funds and decides at a certain point, we got to get out of XKYZ. Like that one's
yeah.
killing us right now. So it makes sense. I mean, nobody works for free, so
Yes.
Well, it almost sounds like in somewhat of a way, you're getting like your own personal, I guess, financial advisor of some sort,
Like a manager,
which,
kind of.
depending on which route you decide to go on, because we'll touch on that a little bit later. But there are so many different ETFs and different types of ones to look at. So
So yes. So continuing with our costs talk.
Mm-hmm.
There are other costs in trading ETFs, for example, the Bidask Spread, like in case of stocks too. So since SPY is the most popular ETF, most liquid ETF, so you will notice that Bidask Spread is so tiny. It is very, very small. If you buy any other ETF, this Bidask Spread would be slightly higher. Now, there are two other ETFs that track the same S&P 500 index. Now, I'm talking about S&P 500 a lot because this is basically the
Yes.
market. Everyone
Right,
talks about
right.
it. So if you are
So I'm going to assume that these are different in terms of the fact that they're weighted differently.
Right. They are equal weighted ETFs too. This is market cap weighted. But if you are someone who's starting to invest, or even a regular buy and hold investor, you should have an S&P 500 ETF in your core portfolio.
When you say equal weighted, does that mean that everything that they hold stock wise is all equal? Like, say they all have 5% of each stock, or what does that exactly mean when you say that?
Yes. So there is an equal weighted version of S&P 500 index. The ticker is RSP. So if you go to the code page, you can actually see that how.
Invesco S&P 500 equal weighted ETF.
Yes.
It's a mouthful.
Yeah, that is a mouthful. Must be very complicated when you do your podcast to read some of these.
Oh,
Trip
yeah.
over your tongue a little
Yes.
bit. I know I would.
Yeah, so
Okay.
you can see the bid and ask for this one is a little bit higher, but not too much. It's only 2 cents
Yeah.
versus the 1.
Right.
Right. So I was talking about other two S&P 500 market cap weighted ETFs. So the one which is the cheapest and is basically the same kind of ETF is the Vanguard S&P 500 ETF, ticker VOO. It charges just 3 basis points,
Oh,
which
wow.
is $3 for every $10,000 invested.
And you said this was, I'm sorry, equal or market?
Market cap.
Market
weighted.
cap,
It's
okay.
basically same as SPY, but cheaper, just slightly less liquid. SPY is used by traders a lot who want to, quickly move in and out of the market.
Based
Trading,
on something happening.
yeah,
Like yesterday, for
like
example.
yesterday, right? So for traders, SPY is a great tool. So they don't care that expense ratio is 9 basis points versus VOO's just 3 basis points because they want more liquidity. In case of VOO, which is very cheap, 2 3 basis points, this basically you get the same exposure, cheaper. The Bidask spread may be slightly higher, but if you are investing just to hold, you are buying it and putting in your portfolio and holding it for a long time, then you don't care so much about trading costs.
Right.
So you look at expense ratio, you look at trading cost, Bidask spread. You can also look at whether this ETF is trading commission free on your investing platform. There are many investing platforms, Fidelity, Charles Schwab, which have commission free trading for certain ETFs. So if VO says available for free commission free trading on your platform, then you save on trading commissions too. So those are the things you look before you invest in an ETF. But I think the most important thing is to do your homework.
Yes.
Always. That's what we always stress here. All about education, doing your homework. Don't just buy something because you think it's a good idea. Do a little research with the free
Yes.
tools we have
Right.
available here at Zacks.
Well, I think we're perfect examples of that because we started the show, and I mean, me and you talk, outside of the show, and we were like, is it something that we are supposed to be investing all the time? But as we did this and put more time into it, we learned that we have to take our time, choose wisely,
Choose wisely, to
and
quote
do your-
Indiana Jones.
and do the research like Neena just said, and just make sure you're making a conscious decision, and not an emotional one where you're just jumping at the whim of
Because I feel like one of us would have jumped out of Disney forever ago.
right. So
Because it was at a 5. I don't even know where I hadn't seen where it was today.
it's
but
dropped a little bit. I think it's at 132-ish today.
But we
so-
know it's a good story. I mean, they really just can't lose. So
Right.
why would you get out of it getting it at such a cheap price? Like, you're
Exactly.
just going to win.
Okay, so kind of moving along a little bit, I wanted to touch on, since we are kind of talking about expense ratios, the difference between a passive and actively managed ETF. I do see sometimes that the expense ratios go up quite a bit. Is there a benefit or a risk? I mean, why is it that we have to pay so much more for those types of ETFs, and is there a benefit to it, I guess?
So, as I had mentioned earlier, actively managed funds have in general not been able to produce outperformance to justify their costs. But because they have a manager, so they have to charge a little bit more. Now, there are certain areas where I think active management can make a little bit of difference. Maybe in case of cannabis stock.
Yeah, we're going to touch on that too. We have an ETF that we've been watching for a while, so we'll get to
Okay.
that one. There's a little teaser for you out there.
Okay, sure. So in that case, maybe sorry, active management can make sense. There are other ETFs too which charge a little bit more. Most index ETFs will charge 3, 4, 5, 6, 7, 8 basis points, less than 10 basis points. But if you buy a niche ETF, say a robotics ETF or a cannabis ETF or a cloud computing ETF, they charge a little bit more, maybe 50, 60 basis points in
And
that.
is it just because it's more a volatile market, essentially? There's a lot more
Yes.
potentially that could
More
be...
research is involved, and even going out and buying those securities that costs a little bit more. And in case of broad index-based ETFs, there is so much competition now because of the fee war that is going on among fund providers. So that is why it is it is not possible for a new provider to launch an S&P 500 ETF and charge 30 basis point for 40 basis point. The new provider would try to look for a new idea which is not available to investors, and maybe
Oh, well, Nina, I have an idea. You
Yeah.
brought up snow. I don't think there's a snow ETF. We should start one.
let's launch a snow ETF and charge 70 basis points.
Sounds
for
like
that.
a plan to me.
Yes.
We'll be retiring really
Yes,
quickly.
Sure, let's do it. So that's fine. And then there are leveraged and inverse ETFs, which because of their investing process, they charge more. But broad market ETFs are very, very cheap.
Yeah, because
good to
I
know.
see QQQ here, and it seems, in my opinion, from what we just looked at, this is another broad market ETF. It looks like it tracks the Nasdaq 100, but this comes at a basis points of 20%. It looks like.
Yeah.
So I don't know, that kind of scares me a little bit as somebody who is a little not understanding fully of what you're paying for. So is there what's I guess the reasoning behind this one? Is this
Oh,
one
it's
actively
active-
managed, or
Yeah, it's obviously you got...
And it's not actively
Oh, it's
managed.
not?
No. So most people think that QQQ is a technology fund. It's actually all non-financial stocks traded on the Nasdaq. So if you look at the holdings for this ETF,
You go into the external homepage, I'm
yes,
assuming?
yeah, it will hold all those hot stocks that people like to own. Right? Are we?
I brought up Eric. Are you bringing it up right now?
I've got it right now. I'm looking at
Yeah.
portfolio right now. So it's information technology at 45%, communication services at 21, pardon me, 21%, consumer discretionary at 16, healthcare at 7, consumer staples at 6, industrials at 2, utilities at less than 1, and financials less than 1.
Yes. So because of that heavy exposure to technology and all the hot names
And
which
being
have been,
probably very volatile.
yes, this ETF has significantly outperformed the S&P 500 ETF, and the provider thinks they can charge a little bit more. There is not much competition among Nasdaq ETFs, so that is why it charges a little bit more. But even
So it's just looking for competition, in other words.
yes, it's very popular. Traders use it a lot, so that is why they can continue.
Start
with
writing
it.
these down, Danny. Snow ETF, and then we're going to need a competitor for QQQ. We're going to be
Alright.
billionaires by the end of this show.
Well, I mean, with all this, I keep coming back to expense ratios and stuff, and actively managed, but I guess, is there a actively managed one that doesn't have a fee, or do all of them kind of make you pay? Is there one out there that's free that you
Well,
can
they're
just
all
buy, or?
Yes. So not actively managed funds, but there are some ETFs which are available which have zero expense ratio as of now. But there is a catch. They,
There's always a
Yeah.
catch. Isn't
yes,
there?
the bid ask is probably really high, and
no.
no, gosh, I'm well
Of
off
course,
of
no,
this.
no. Okay, let me revise that.
Yes.
The Bidask spread is obviously high because they are not as popular. So the ticker is SFY. It is the SoFi Select 500 ETF. Now, as I had mentioned earlier, that because of the competition in ETF space, it is very difficult for a new provider to survive or thrive in the market. So they are trying to do something different. So what this provider did, that we will waive the expense ratio.
Yeah, no expense ratio here.
For 1 year.
Oh,
one
for a year. So there's
For,
there's
that's
the
the
hidden
catch.
fee. Yeah, there's the hidden fee they didn't tell you about, folks.
yes.
Sign up with us for a year for free.
Well, I mean,
then
yeah. Well, it kind of struck me when we're sitting here talking about all paying these guys. It's like, is there a free one?
Well,
and then she goes and says, yes, there is, but
well, you got to
have
think
end up
about it
paying
though. So
for
these
it,
are a basket of stocks that are collected. It's not like a computer. I bet you actually by now there's probably some AI computer generated ETF at this point. But I mean, probably traditionally it's a basket of funds that people put together. Somebody has to make sure that they're winning or their numbers are up or whether the company is even viable. So it makes sense that you have to pay somebody to do this.
Absolutely, but I had to ask because you never know if there is.
You just want cheap. You just want cheap ETFs, Danny.
There's nothing
I bet,
wrong
like I said,
with that.
Nina, is there an AI zero expense ratio ETF out there yet?
Sorry,
All right,
no.
write it down, Danny. That's number 3. We're
Oh,
making
man.
an AI-driven ETF.
I think we're just going to be
No,
starting.
they're AI-driven ETFs, but not zero fee. But they charge.
Oh, okay. Well, we're gonna make a free one because computers are cheap labor.
Yeah, there is an ETF which uses artificial intelligence to select stocks. It's called AIEQ.
Good name.
Yes.
Good name. AIEQ.
It charges 77 basis
Oof.
points because they have to put all that algorithm in place and everything.
That just sounds greedy. We could open source that.
I don't know.
and-
I'm looking at another one, Robo here, ETF. Looks like it does a bunch of robotics and automation, and that
Yeah,
is
but that's
a
different.
95 basis points.
Yeah, but we're talking about that's different. They actually deal in robotics. We're talking
Yes.
about AI-driven ones.
This one uses AI to select stocks. There are other ETFs too. This was the first one which totally used AI to select in the selection process.
Well, obviously, it's expensive computing
Yes.
because it's
Yes.
77 basis points. Ouch. Yeah, we'll open source it. We'll put it out there to the world and have the professional people out there do it. All right, so Danny, I think it's time to move into the battleground.
Yeah, absolutely. Let's do it.
All right, guys, so we are back here in the battleground. And so with that, because Nina's here, we have talked about the ETF Vice X, I think it is, as it just pulls up.
Well,
Vice
it's
X
been
ETF.
one that we brought up
Forever ago.
Yeah, I
That's a
forget
while
why
ago.
it came up, but it was one of those things where we were kind of fascinated that people are investing in vices,
Which is
I feel like
hilarious. I feel like
everybody-
you can't lose.
No, because everybody has a vice, whether it be
Cigarettes, alcohol.
I mean, there's so many
Yeah.
different things out there that people tend to, enjoy and indulge in. So I feel like it's something that's never going to go away, and we were fascinated by it. But
I thought that now you're here, you could tell us a little bit about it and give us whether or not we should add this to our portfolios, because I think it would be a winner personally. This is the one I'd bring to the table for the battleground today.
So as you mentioned, it is vice, so tobacco, marijuana, alcohol. Now, it is actively managed, so it is a bit expensive. It charges 75 basis points. And if you look at the performance, it has not beaten the S&P 500 index. So maybe if there is recession, this ETF will outperform, but
Because
as
people are down.
yeah, but as long as the market continues to be resilient, it is very difficult for anyone to beat the market except for maybe technology stocks.
So I see like wins in here. So there's gambling at. Like, yeah,
Well,
this seems like this would be you couldn't lose.
So it's 24% alcohol, 8.2% tobacco, 30% cannabis related.
Wow, that's actually more than I would have expected them to hold, considering how volatile that is lately.
Yes,
That's-
and then there is another 14% tobacco with cannabis exposure. That's interesting. And, last year cannabis was very, very hot, and earlier this year too. So maybe this cannabis exposure would have helped the ETF. But this year, over the past few months, those stocks have been really volatile.
Yeah.
And pot stocks have not been doing well. Pot stocks and ETFs have not been doing well. So that is why probably the performance suffered. But if you think that people will continue to invest in sin stocks, maybe this is worth a look if economy goes downhill.
I just think it's worth a look just because I had heard, what is it? Philip Morris had invested like $6 billion into Aurora Cannabis. So if a big player like that is willing to start dumping money, especially $6 billion, I mean, I'm sure to Philip Morris that's just pocket change, but to a growing industry, $6 billion is almost probably the entire industry's market cap.
Right.
Well, I'm sure there's a marijuana ETF out there because, I mean, we have so many different types of ETFs. This is just, I guess, hitting the tip of the iceberg, per se.
Yeah.
There's stocks that they can use in ETFs. There's commodity ETFs. They do bond ETFs. So I feel like there's so many options that when you look at the Vice one, you could then just break it down to be like, well, I really like the marijuana play within the Vice. Maybe I can kind of look at, an ETF there. So I feel like with all the knowledge that we've kind of accumulated today, there's a lot of digging we would have to do to find one that's kind of right for us. I don't know.
Yeah. So as I mentioned, cannabis was very hot last year. So there was only one cannabis ETF which launched or changed its index in December 2017. So last year there was only one cannabis ETF, ticker MJ. But since cannabis was so hot, so many other ETF sponsors, they applied for cannabis ETFs. Now SEC was very careful last year. They did not approve those ETFs for a long time. They looked at the holdings, whether those are legal and this and that, because marijuana is still federally
legal, in the United States.
Yeah, the banks can't even touch it, so it's a very sticky situation.
Haha.
So all those ETFs which were filed many, many months back, they made their debut this year. So now we have 6 pure play cannabis ETFs.
Ouch.
There's a lot of competition in this space, and especially when cannabis stocks are not doing well, they are finding it difficult to gather assets.
Oh, I'm sure.
When it was hotter, people were pouring money into marijuana. Now, since marijuana is a volatile space, I think an actively managed approach makes sense because there is not much research available on those stocks. If you want to buy a more popular ETF, you can even look at the underlying holdings, look at their research and everything.
Is MJ not actively managed? Is that?
Yes, MJ is index tracker. So there are 2 actively managed marijuana ETFs, which I think are worth a look. One is Toke.
Toke?
Yes.
Oh my God.
They're really getting clever with these names.
God. That's getting 2 sound effects. That is just too hilarious.
That's awesome.
Oh my God.
So that is actively managed, and that is also the cheapest marijuana ETF, which charges 42 basis points. So I think it is worth a look.
Oof, that chart doesn't look good.
Yes, as I mentioned, it's been painful for those ETFs and stocks. There's another one
42
which is
expense ratio.
Yes, there's another one which I think is worth a look. It's the ticker is CNBS. That is also actively managed. It is a bit more expensive than Toke. Charges 75 basis points. But why it is worth a look? Because it is managed by Tim Seymour, who is one of the experts in cannabis investing, CNBC's Tim Seymour. So I think that's why this is worth a look.
Let's see how much he's getting paid. He's getting 75.
Well, he's. I mean, if he has the insight and he's, again, you're getting him as a kind of your own personal
Right.
guy who's going to lead you through this industry, because it's really blowing up. Everybody's kind of seen it, over the past couple years. But it's one of those things that it's so new. It's a hit or miss. So it's a very I would say risky decision if you're going to go buy.
I'm going to
a
look
stock
into
on
this
its
one
own,
just because
so.
I'm interested to see what his background is.
Yeah. He has been investing for a long time. So I did a podcast with him, which is available on the quote page. You can, listen to it if you're more interested in his thoughts. But I think it's worth a look if you're interested in marijuana space. But an advice for investors: this is a very, very volatile space, so keep your exposure low.
Yeah, you wouldn't want to weight your portfolio with this. That's probably for sure.
Yeah.
Here's a weird question. I don't even know if this actually even is a real thing. It just came into mind while we were talking about all this and how it's still federally illegal in the United States to actually sell cannabis. But how does CBD play into any of this? Because that one's actually federally legal.
CBD is federally legal?
Yeah.
I did not know about that.
Yeah, CBD is actually federally legal, so they can sell it, and it's derived from marijuana, which I don't quite understand. So that being the case, I'm wondering if there's any CBD plays.
I'm sure it would be.
All these ETFs, they have a lot. They basically invest in medical marijuana. So CBD is a big part of medical marijuana. They don't invest in illegal marijuana.
So this probably only is that play.
Yes,
so, okay.
Medical and CBD. They all hold
Fair
companies that are involved in medical marijuana and CBD.
Okay, so it's not even recreational. Isn't even a part of this yet. Okay, I was okay. So that actually answered one of my questions because it just came to me. I was thinking about that. All right, well, fair enough. Fair enough. You learn something new every day, as they say.
Yes. And as you know, that marijuana will become legal in Illinois starting 1st January.
Yeah, January 1st, yes.
I keep forgetting that.
But it's still only in
be
Illinois. So, I mean, federally, the government can
Federally,
still come in and put the kibosh on it if
Yes.
they want. So I guess we're just going to have to wait to see what Mr. Trump's going to do up there. Mr. President, if you're listening, please make us a lot of money and just say yes.
Any closing thoughts that you want to kind of share with investors? Anything that they, I guess, should be looking out for in the next couple months or anything like that, Neena?
So yes, the market is going to be very volatile in the coming months because there's so much uncertainty regarding the trade policy and now the impeachment proceedings. But we have seen that market has been very resilient, and U.S. large cap stocks have continued to do well. Normally, I say that diversification helps, but all other asset classes, international commodities, not gold, commodities, not including gold, other commodities, they have massively underperformed the S&P 500, and especially QQQ is a even better performer. So, keep your emotions away, stay invested, maybe buy an ETF like QQQ or VOO so that you have exposure to all those stocks that have been doing so well. And ETFs help you to keep emotions away from investing so that you don't buy too many stocks every day. Here
And if you're a little nervous, maybe you had a little bit of too much of the TOKE stock.
Yes. Good suggestion.
All right, guys. I think it's time that we wrap it up. Neena, I'd like to thank you for coming in today and being on the show, giving us an insight into the ETF world.
Thanks for having me.
I'm sure we will have you back again because ETFs seem to be a topic that we just barely really scraped the surface on. I know that I'm gonna have to go back and digest a lot of this because you imparted a lot of information even for me to take in. With that, I would like to say thank you everybody for watching. Be sure to check out Ben Rains on Tuesdays and Thursdays at 11 o'clock. We will be back next Wednesday with another show and another guest. And in the meantime, Danny, you got any last words?
Nope, not from me.
All right, excellent. Well then, like, subscribe, and we'll see you guys next Wednesday.
Have a good one.